Hi there, welcome to Kneppy Invest and welcome to the stock of the day. Avita Medical, ticker code AVH on the ASX. I've always thought of this company as a burn treatment company, but they're a little bit more broad than that. They deal with regenerative medicine for skin restoration. Definitely burn treatment fits within that. Probably their most well-known product is Resell Go. So I should also mention they're selling stuff. This is a real company, not a story stock. They are actually selling stuff. They have revenue, increasing revenue. So that's one of the things that intrigues me about this company. This company is growing, but they're a little bit short of being profitable and free cash flow positive, but they are on that trajectory. So that's my big question is when they're going to get there. They do have some guidance for us in relation to that. But unfortunately, on the morning of January 8, 2025, they have changed their plans to when they are becoming cash flow positive. And in fact, today they did release an announcement in regards to that, but also it was a downgrade. And there's one thing the market really, really hates, and that is when a company releases a downgrade. In fact, share price of Avita Medical down about 18% last time I looked. Yep, 18.3%. And this was a little bit of a surprise to me because the share price of Avita, it was in an uptrend, not anymore. So the market was saying, we're confident that more than likely the company will release something positive, maybe a profit upgrade, or maybe not a profit upgrade, a revenue upgrade, or maybe they'll achieve free cash flow positiveness a little bit earlier than they expected. The market did not expect some negative news, and that's what the company has provided the market today. So let's have a look at this particular announcement. In fact, it was titled AVH Updates, Expected Fourth Quarter and Financial Year 24 Revenue, and they also provided Financial Year 25 guidance. I saw this announcement or the title, and I thought initially this would be pretty good, and I thought it would be, maybe an upgrade, and I thought the share price would rally today. And that's because the share price was in an uptrend. So what I'll do in this video is I'll go through this announcement and then we'll have a look at the chart. Is this an opportunity? I don't know. So let's have a look at the announcement. And so I started reading this thinking, oh, this could be good. This could be a nice little, I wouldn't say a breakout in the share price, but this could be sort of validation of the market because the share price is now in an uptrend. So for the crux of this really, and the reason why the share price is down a fair bit is found in the second paragraph. Avita Medical now expects commercial revenue to be approximately 18.4 million, reflecting growth of around 30% over the same period in 2023. We like to see that sort of growth. So 30% growth in the previous corresponding period is really good. Previously provided fourth quarter guidance was in the range of 22.3 to 24.3 million. I was like, oh, wait, that's significantly lower. So they were thinking, that's significantly lower than I was expecting. That's like $4 million lower than expecting. So that was when I read that particular sentence. That's when I went, oh, this is going to be negative. Anyway, so they continue based on these quarterly results. The company expects full year 2024 commercial revenue to be approximately 64.3 million. Still pretty nice growth of 29%. Previously provided full year 2024 revenue guidance was in the range of 68 to 70 million. So this is a revenue downgrade. Now, because the company is not profitable, not free cash flow positive, we can't call this a profit downgrade, but this is the next worst thing. It's a revenue downgrade. Company's not performing quite as well as they expected. They do go into reasons why, and that is important. For instance, the revision in fourth quarter guidance is attributable to a combination of factors, with slower than expected purchasing activity being the primary driver. That's not a good thing. It's not a good thing because this could be an ongoing issue, or it could be a company issue, company driven. Maybe there's something wrong with the company and their salespeople, that sort of thing. Several of the company's hospital accounts adjusted inventory levels at the end of their fiscal year, resulting in reduced purchasing during December. So it could be short term. So not exactly sure what's going to happen in the future for Avita Medical. It could be more of a short-term issue, could be a longer-term issue. While this type of behavior is common at year-end, the extent was more pronounced than we had anticipated, contributing to less revenue in the quarter. So again, and I've said this a few times in the past, I do wish management of companies would be a little bit more conservative when they release any forecasts, because sometimes things don't go the way you expected. and this is exactly true for Avita. If they did release more conservative forecasts and then they hit those forecasts, the share price would have dropped. There's a chance the share price wouldn't be as high as it was, but I think it would have dropped as low as it did. And if things are better than expected, they can release an upgrade. And the market loves upgrades. So I do think it's better to be more conservative when a company or management of a company is releasing any sort of guidance. They also released a financial year 25 guidance. So they are expecting significant growth. They're expecting the revenue to keep on growing. So they're now expecting financial year 25 revenue to be between 100 and 106 million, which is between a 55 and 65% growth on the previous corresponding period. That's pretty impressive. But what the market is now thinking, well, you couldn't really anticipate what was happening in your sector, your field, your customers. So can we trust this revenue guidance? Can we trust that? Now, they also mentioned something here in regards to being cash flow positive. Here we go. Updating previous guidance, the company now expects to achieve cash flow break even and GAAP profitability in the fourth quarter 2025 instead of the third quarter 2025. So they've pushed back that inflection point of being cash flow positive and also profitable. And the market doesn't like that because who knows what's going to happen in the next year. Maybe they push that timeline even further back. Anyway, so let's have a look at the chart for Avita Medical. And not Sprott Uranium. In fact, uranium has dropped the last few days. Avita Medical, the share. One thing you'll notice if you do look at the daily chart, a lot of volatility in this company, lots and lots of volatility. I don't think I've ever traded this in the past, and more than likely I won't. But I was getting a little bit excited. Maybe not excited is the right word, but I was having some good thoughts about Avita Medical back in early November. It looks like the share price broke out on the 5th of November at $3.40, and the share price kept on going up. And I was thinking, looks like things are turning around, maybe not turning around, but definitely things were looking on the up for Avita Medical. And then all of a sudden, the company released this downgrade, and I do think there is a chance the upgrade has been, I wouldn't say destroyed, but definitely hurt a fair bit. So I no longer would have Avita Medical on my watch list right now for a trade. Okay, so that's all I have for this particular stock of the day on Avita Medical. If you have any questions, any thoughts, leave those in the comment section of this particular video. And otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.